Something is eroding trust in one of the most acclaimed modern jets of the last decade. Behind the scenes, engines that promised savings are now exacting a price in availability. At airports, flight plans are being canceled. In CFO boardrooms, alternatives are being reassessed. While the technical solution is being pursued, a question has been deeply troubling Airbus executives. How many customers will decide to switch tail colors before the problem is fixed? And unfortunately, this hasn't been an isolated problem.
If you're also passionate about the world of aviation, consider subscribing to the channel and supporting our team.
In late September 2025, discrete news crossed the Indian Ocean and reached the offices of manufacturers, lessors, and aviation analysts worldwide. Air Austral, a small regional carrier connecting the French island of Réunion to the African continent, announced it would completely abandon its fleet of Airbus A220-300s. 3 aircraft with only 4 years of service would be returned before even reaching a third of their expected useful life. According to reports, 2 of the 3 jets were grounded, one for an extended period and another taken out of service in September 2025, forcing Air Austral to cancel flights and revise its entire route network. The culprit? The Pratt & Whitney GTF PW1500G engine, the same technology that was supposed to have revolutionized fuel consumption and transformed the economics of small airlines. But this was not an isolated case. Air Austral's decision is merely the most visible symptom of a crisis that has been dragging on for years and is silently reshuffling the deck in the competitive 100 to 150-seat jet market. While Airbus and Pratt & Whitney race against time to implement technical fixes, a question is beginning to echo through airline and lessor corridors. Isn't it already too late for some business relationships? And more importantly, who's ready to occupy the space left by this crisis of confidence? And the answer has been coming from South America. In the mid-2000s, with fuel prices high and environmental pressure mounting, the industry sought to reduce consumption without losing power. Pratt & Whitney presented an ingenious solution, the geared turbofan engine. In traditional turbofans, the fan and core rotate at the same speed, even though each has a different optimal rotation. The GTF solved this with a gearbox between them, allowing the fan to spin slower and the core faster. The result? Up to 16% less fuel consumption, 75% less noise, and 50% fewer nitrogen oxide emissions. Between 2016 and 2017, A220's and A320neos equipped with GTF engines hit the market and were hailed as revolutionary. But behind the innovation lurked a hidden technical flaw that would only reveal itself after thousands of flight hours, a time bomb the industry didn't yet imagine existed. Problems began emerging sporadically in 2020, but it was in 2023 that the situation became undeniable. Pratt & Whitney initiated a recall campaign for its GTF engines after discovering that contaminated metal powder had been used in manufacturing some components, which could lead to corrosion and cracks. The company began an inspection, testing, and repair process that would affect hundreds of engines worldwide. What seemed to be an isolated problem soon revealed its true scale. The company announced that due to recent updates related to the metal powder issues, it would be necessary to remove between 600 and 700 engines between 2023 and 2026, meaning up to 350 aircraft could be impacted by these inspections. For airlines, this was a heavy blow. Pratt & Whitney implemented financial compensation programs. RTX's CFO, a Pratt & Whitney parent company, estimated that by the end of 2024, the company would pay up to $1 billion in credits for grounded aircraft, quantifying this as cash equivalents for its customers. But money, however generous, doesn't solve the problem, it only softens it. Indigo, India's largest airline and one of the main A320neo operators, faced a serious operational collapse when GTF engine failures emerged. With dozens of aircraft grounded, the company needed to rethink its strategy. Starting in 2020, Indigo began receiving only aircraft with CFM LEAP A1 engines, abandoning the GTF, a change that symbolized distrust in a technology once seen as revolutionary. Over time, the fleet gradually returned to service, but the impact was significant. Extra costs with emergency leasing, maintenance renegotiations, and route cancellations became inevitable. While Indigo managed to handle the GTF problems better, Wizz Air faced an even more severe crisis. The Hungarian low-cost carrier expected to have up to 45 A320neo aircraft grounded in 2025 due to engine inspections, a devastating blow for a business model that depends on maximum fleet utilization. In May 2025, 37 aircraft were immobilized, with expectations to keep about 34 out of service until 2026. The impact was immediate. Profit plummeted 61.7%, with 20% of the fleet grounded. Wizz Air expects to normalize the situation only in 2027, showing the depth of the crisis. Turkish Airlines, one of Europe's and Middle East's largest and most respected carriers, was also heavily affected. The company expects to end 2025 with about 50 grounded aircraft, more than at the beginning of the year, a number that alone exceeds the entire fleet of many regional carriers. No operator symbolizes the promise and collapse of the A220 GTF better than Air Baltic. As the model's launch customer, the Latvian carrier bet its entire fleet on the A220, a strategy that would make it the aircraft's showcase, but also hostage to its problems.
In 2025, Air Baltic canceled 4,670 flights due to engine reliability failures, affecting thousands of passengers and tarnishing its reputation. The crisis was so profound it contributed to CEO Martin Gauss's departure, evidencing that the problem transcended the operational level. As an exclusive A220 operator, the company lost the flexibility that larger operators had. What should have been an advantage in standardization became a structural vulnerability when the GTF began failing in series. While airline executives worldwide deal with unplanned maintenance schedules and red spreadsheets of fleet availability, a Brazilian manufacturer watches closely and acts. Embraer, historically viewed as a niche player in the regional jet market, is experiencing something it hasn't seen in decades, a real and measurable competitive window in the 100 to 150 seat segment. September 2025 will be remembered as a watershed month for Embraer. Within weeks, the company announced 2 commercial victories that in isolation would already be significant, but together signal a potential sea change in the market. First came Avelo Airlines, a U.S. low-cost carrier that made history by placing the first firm American order for the E195-E2, 50 aircraft with options for 50 more. For the first time, an American airline was betting its chips on the next-generation Brazilian jet for fleet expansion. Avelo, which operates a business model focused on secondary airports and low-density routes, saw in the E195-E2 exactly what A220 operators thought they had found: operational economy, network flexibility, and proven reliability. Days later came the second strike. LATAM Airlines Group, one of the Latin America's largest airlines, announced an order for up to 74 E195-E2 aircraft, including 24 firm orders and 50 options, with a potential value of up to $2.1 billion. A loyal Airbus operator for regional flights with the A320 and Neo family, Airbus felt the blow. Embraer had been working systematically to position the E2 family as a viable alternative in the regional jet and small single-aisle segment. The E195-E2, the largest in the family, accommodates 120 to 146 passengers depending on configuration, placing it in direct competition with the A220-300, which accommodates about 130 to 160 passengers, and at the lower end of the A319neo. But what makes these contracts particularly significant in the context of the GTF crisis is the timing. While A220 and A320neo operators struggle with fleet availability, Embraer offers something that, at the moment, may be worth more than superior technical specifications: operational predictability and proven reliability. The E95-E2 uses Pratt & Whitney PW1900G engines, which technically are also from the GTF family, but which were not affected by the powder metal contamination problems that plagued the PW1500G and PW1100G. It's a crucial technical distinction that in practice translates to a simple and powerful difference: E2s are flying while A220s are grounded. Before talking about a revolution, it's necessary to recognize that Embraer faces real obstacles to fully capitalize on the GTF crisis. The first is production rate. In 2024, the manufacturer delivered 206 aircraft, a solid number but small compared to Airbus and Boeing's scale. Increasing production requires time, investment, and expansion of personnel and suppliers. The second is the leasing market. Most commercial aircraft are operated via lease, and major leasers prefer Airbus and Boeing as high liquidity assets. To change the scenario, Embraer would need to prove that the E2 will maintain stable demand even after the crisis, something that requires confidence and a track record of residual value. The third is technical and operational. The E95-E2, while efficient, doesn't replace the A220 in range or performance on certain routes. Additionally, introducing a new aircraft type implies high costs in training, maintenance, and integration, factors that make the transition complex for many operators. But beyond all technical, commercial, and financial scenarios, there's an element that cannot be quantified: trust. Airlines are tight-margin businesses where fleet availability is everything. When a CFO looks at the numbers and sees grounded aircraft costing money instead of generating it, when a COO has to explain to the CEO why the on-time performance target wasn't met for the third consecutive quarter, when network planning teams need to cancel profitable routes because aircraft aren't available, these experiences leave marks. That's why the Air Austral case is so revealing. This wasn't a decision based purely on short-term cost-benefit analysis. Aircraft with only 4 years of age still have decades of potential useful life. If it was just about numbers, the rational answer would be to wait for fixes and compensation. But Air Austral decided to cut its losses and exit completely. Pratt & Whitney and Airbus may eventually resolve all technical problems, but rebuilding trust, that intangible commodity that takes years to build and days to destroy, may be a much greater challenge. The GTF crisis places Airbus in a delicate strategic dilemma. The A220, conceived as the future of regional aviation and natural successor to the A320 on smaller routes, now faces distrust because of failures from its engine supplier, Pratt & Whitney. Airbus has few options. The A220 was designed exclusively for the PW1500G, and adapting another engine would require years and billions in investment. In the end, Airbus depends on third parties to save one of its most strategic products, while the A320neo with CFM LEAP 1A engines continues operating without major problems. Currently, the situation is one of crisis, unpredictability, and risk. Each news story of more grounded aircraft, each quarter with availability below what was promised, each frustrated operator giving interviews, all of this reinforces a narrative of unreliable products and unfulfilled promises. And what about Embraer? How is the Brazilian company navigating this delicate moment? The temptation would be to overpromise, guarantee perfect availability, offer unsustainable commercial conditions to win contracts, expand production riskily. But that would be exactly the trap that could transform opportunity into a disaster. The strategy has been the opposite: underpromise and overdeliver. Be conservative in delivery schedules, but meet them religiously. Don't attack Airbus or Pratt directly, but let the operational track record speak for itself. Invest in customer support and demonstrate that even being smaller, Embraer treats each operator as critical. The company already demonstrates this behavior. In recent order announcements, Embraer executives have been careful not to mention competitors' problems, focusing instead on the E2's own merits: operational economy, network flexibility, and proven reliability. So where does this leave us? The GTF reliability crisis has created a real competitive window for Embraer. This is undeniable. Recent contracts with Avelo and LATAM, added to other smaller orders, prove that operators are actively considering alternatives. What we know for certain is that we're witnessing a rare moment in commercial aviation, a period where established assumptions are being questioned, long-standing loyalties are being tested, and opportunities are opening up for those prepared to seize them. The market is watching, operators are deciding, and the future of competitive battles that seemed settled just a few years ago is suddenly wide open again.